Good morning, traders and investors. Are you guys ready for another morning right here on Pre-Market Prep, where you get all the information to get your trading day started? Excited to talk about today's action. Of course, the release of the U.S. Federal Beige Book due later today. We'll definitely talk about that. The Far Out Apple event. Don't miss that. Of course, 1 p.m. Eastern. We'll give a little bit of conversation on that. Coupa software, NIO, Newell Brands, Wolf Research, upgrading Pinterest, Rocket Labs, and Google, all in today's action. And of course, we got our special guest today, Rob Mclister, editor of MortgageLogic.news and founder of DFS Hub. Ready to get into it. Rise and shine. It's time to start the day with none other than Pre-Market Prep. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. Good morning, traders. Let's go ahead and bring on Joel Elconin, Dennis Dick, and let's get into this market. Looks like we got ourselves a little leak.
Boy, oh boy. Let's run down everything. We're down a $1.50, 39.09. I'm going to talk about the high and low for a second. Crude up 13 cents at 87.01. Gold flat, 17.13. Silver up 14.7 at 18.05. Bitcoin, we're in the 18 handle now, folks. Clinging to the low of the move. Actually made a new low of the move. Down a quarter at 18.1610. And Ethereum up big yesterday. Gives it all back, reverses. Hasn't made a new low for the move yet. Down 61.50 at 14.90. So Triple D, we opened up. I checked the SPOOs, middle of the night up. We took out the low of the move. So I'm thinking, okay, we're going to one of these down 50 mornings. And then I wake up and we're trading near the highs of the session. And then we lose 10 handles. I think, could this just be a chop day?
It's a chop year. And I mean, again, if you're chasing moves, you are not listening to this show. Because
not at all.
Has been working, has been fading moves. Yesterday, holy mackerel, just fading all of those moves. Money making day for the day trader, I'll tell you that. Up, down, up, down, up, down, all over the place. You know, we're up. Oh, no, we give it all back. Oh, no, we rally it all back. Oh, no, we give it all back. Oh, no, when we chop around. This is what 2022 has been. It's been the year of chop. Yes, we have leaked. Yes, we have had an overall downtrend. But there has been a lot of chop in that downtrend. Nothing has been smooth. You think you're going to short it and forget it? Shorting's been painful too, because there's been some wicked rallies, wicked little short squeezes inside this major overall downtrend. So I think we still head lower overall, but again, we got to continue to play the chop, fading moves, buying dips, selling rips, shorting rips, buying dips. That's the recipe for success in 2022.
Nope. The bottom line is we made a new low for the move, right? We had talked about, holding the lows from last week. We made a new low for the move by a decent margin. That's not a good thing. And we made a new closing low for the move. So, I mean, just strictly based on the price action, it's hard. I'm not saying we're not going to try and predict a turnaround, but unchanged 39.10.5, man. You probably drive yourself crazy looking at that this morning.
A good signal would have been that Bitcoin had been just getting tanked on lately. And we've been seeing how the correlation has been more along, when the market's down, Bitcoin's down. But when Bitcoin's down, does that mean the market's down? I mean, right now you're seeing Bitcoin down towards 18,000, and it was down pretty big yesterday. I was trying to find a reason for it, but who knows? Maybe that gave us a little bit of a sign that we're getting some.
Should we talk Bitcoin?
The reason's my tweet from 2 days ago. I said I think Bitcoin's going under 10,000. I'm going to stick with that. I think
under 10.
Under 10.
That was my number.
I said that when it was 20. maybe 2 or 3 days ago. It wasn't very long ago. So I think it's going under 10.
My
I think
sweet
there's
spot.
a pain trade. There's been a pain trade everywhere. There's going to be more of a pain trade. And some people in other cryptocurrencies, like, what are you talking about? There's so much pain. And it's true. But,
Yeah.
I mean, we're still in this, new world where stuff, is inflated. I mean, you're putting money into something that is maybe going to be a currency of the future, but really it's just numbers. So it's hard. And I've been on the bearish side of Bitcoin here for a long time. You guys know that on the show. I was bullish for a little while there because it seemed like, there was a story. Stories ended in 2020, in January, or what it was, February 2021. Stories were all over. The story stocks, it's now about fundamentals. There is no fundamentals. I mean, is there a case where you could transact in it? It's possible. And I can see a use case. I don't think it's a zero, but I don't think it's this easy sledding up to 100,000, 200,000, a million. I just don't see it. I think it's going under 10.
You know when the absolute top was? You should remember this.
Yeah,
Well,
I called
yeah.
it. It was on Saturday Night Live. Must go
Yeah,
on Saturday
exactly.
Night Live.
Yep.
We called it. We called it a week ahead of it, saying this is going to be the topping event. I even started a hashtag SNL topping event for crypto. SNL topping.
Now, I will.
There.
I
We've
will
got
be in the
this
camp.
story right.
I will be in the
like one
camp that
thing-
we can go back there. In some stocks, I don't think we're ever going back there. In Bitcoin, I think we could go back there eventually in the long run. But who knows? That's just
I don't. Nobody knows anything in the long run. All we can do is feel out short-term momentum, and and it gives us a good feel for what the overall. And obviously, there's going to be people who aren't going to like that. Hearing it's going to come back. Like I said, I know that one person, friend of a friend, who had four houses, put it all in Bitcoin at 55,000, sold all the houses, had worked his whole life, sold all the houses, put it all in Bitcoin at 55,000, and now it's down to 15. And if you talk to him, he says it's okay because eventually it's going up to 1 million and I'm going to be rich. So I mean, that might be the case, but do you think everybody just gets rich? Do you think all these crypto people, is that how it works? You just like, it eventually just works out and you just get rich. That's not really how the market works. So I think it's going a hell of a lot lower before it ever sees 100,000.
And also, I mean, we talk about the market circumstances. They're a lot different this time. I mean, you're in a rising interest rate environment, right? With higher, we haven't faced this kind of economic uncertainty with rising interest rates, rampant inflation, macro issues with the two other supposed superpowers. I mean, it's just a whole different ball of wax. It's not the same. And then you think COVID was one thing, right? Now you're looking at like 3 COVIDs, with everything that's going on. So the numbers speak for themselves. And man, it's just the days that bother me the most are Friday and Monday. Friday, man, we were higher. That jobs number, that was good. Then you give it back, right? So we were down. I look from the high where we were down in the reversal. Yesterday, or they pumped it Sunday night. They pumped it Monday. We pumped it on the open. Boom, the liquidity comes in at 9:30 and they flush it down the toilet. So those are the worst kind of days. And then a day like today, you were down 20 or 30. They get it up 13, back down in the red in the 10.
They can't hold it for more than 24 hours. They're just not
indicators.
holding any gain. Rips have been sold so hard on everything here. There are money managers that chase that last move saying, okay, yeah, we're out of the woods. We know Kramer started getting bullish right at the top of the last move 3 weeks ago. And, it's just not the market to chase in. You got to take off those chasing shoes because this is what you learned in 2020. You chase and you make money. And you learned in the beginning of 2021. That's not the way the markets work. Chasing doesn't work. I take you back to that story when I first started break trading in the Detroit office in 1999, and I had that one person sitting beside me, and he was chasing every move, and I was just learning from him. I didn't know anything back then, just learning. I'm like, holy mackerel. I'm like, as you chase, then it turns and it turns and it turns. And he kept getting caught on the turns because he's like, okay, this is going. Okay, I'm going to get in this now because this one's going. And then it turns. He's buying just at the tops. Chasing does not work with trading. It worked in 2020, taught you all the wrong stuff, does not typically work. So if you're chasing moves in 2022, you are getting punished for it, and rightfully so.
All right, now today, definitely pay attention to the release of the U.S. Federal Reserve Beige Book due later today. And of course, the European Central Bank policy decision is on Thursday. So keep that in mind. Definitely going to be affecting the markets tomorrow. Of course, if you guys don't know what the Beige Book is, it's published 8 times a year. Right before the FOMC meetings. And this is data compiled by 12 district banks about the economic conditions that they see in their respective economies, the regional economies. So it's a little bit of a deeper dive look, more in a regional outlook from the banks. It's a report given out there. So if you want to do a little bit deeper dive in economic, you could take a look at the Beige Book, but understand that it will kind of have some effect on the thinking of investors.
And if you want to break it down, you hope it's terrible. Yeah. It's going to be, they're going to call it like.
I mean, the economy seems strong lately. I mean, we've gotten good numbers yesterday in the non-PMI manufacturing. So this just leaves room for the Fed to continue hiking until they see truly.
Are they going to go a stick? I mean, is that the thing that people are worried about?
No, they're going to go 75. They're going to go 75.
I think 75.
I think it's kind of a given. I think it's a given about this one. Now everyone's looking forward towards what's after this. I think it's almost a given already. I think that's why the market is also maybe coming down. I think it's already pricing it in. But we'll see what happens there. Let's definitely pay attention to see what happens. If you guys see some shakeup there, it's something to keep on watch. And then let's get into the Apple event, the far out Apple event at 1 p.m. Eastern today. I don't know why they called it far out, but who knows about that one. Let's take a look at what's going to be happening. Of course, release of iPhone. You'll have some new mentions from different products, different watch. But really, I don't see anything new here. And I just feel like it's insane to me that Apple can just kind of wash products every 2 years and we just end up buying it anyways.
That's
the same products.
Point.
The same products.
Point. Yeah, it's a very good point, Mitch. At a certain point in time, how much have they milked the iPhone? I mean, the watch, I don't know how many people even buy the watch, but how long have we, been talking about, the iPhone? It's like half the revenue. It's a cash cow. I mean, people aren't going away from them. So that's a good thing. But we need to get some new products there eventually. Gene's talked about maybe they're working on a car. We're going to have that or something else eventually here. I just, the reason I've hedged my entire Apple position, my long-term stake that I've had for a decade, is just the fact that I don't think the multiple is justified anymore. And that's, obviously I was early on it again, was hedging 155, 160 on the way back up after it was at 130, and it went to 170. Now it's back down here below where I hedged it. But still, I just see it at 25 times earnings in a rising interest rate environment. Like, just go back to, put your CFA hat on. When you bring up that discount rate, when you bring up that, risk-free rate, all multiples contract because it's just based on time value of money. So you're paying 25 times earnings. Maybe that works when interest rates are 2%. Maybe it works when interest rates are even 2.5. You start getting up to 4, 5, 6, 7. And I don't know if we're going that high, but we're well into the 4s, on a risk-free rate. I know that, like I said, in Canada, the GICs in Ontario are well into the 4s now. I mean, it's got to hit eventually. That's why I just take off the blinders and just look overall. And this is what nobody does, I think. Just take the overall picture and just get a feel. You can get caught up in the beige book, you can get caught up in the minutia of, your technical charts and all this other stuff. The big picture is the Fed is trying to bring the economy to slow it down to get a hold of inflation. And they're not going to stop until it does slow down. If stocks are based on prices that, are derived from economic activity, stock prices got to go down. So eventually the Fed wins. Don't fight the Fed. So there's just no reason to just come in here and say, yes, today is the bottom, because even if inflation has peaked, we're so far from 2%. This Fed's not coming and bailing out this market.
2%. I mean, why? I mean, I saw an article about it. I mean, we're not going back to 2%.
Maybe never.
Yeah.
Maybe never.
It's an historical standard that, is just, it needs to be adjusted. Because if they're just keep using that, then It-
They're
Yeah, but
gonna
you can
beat
say
this
that.
market.
Never gonna get it.
They're gonna beat it down.
They're
They're
going to
never
beat
gonna
it
get it.
down.
They're gonna come and say, you know what, 4% is okay. I should have read that article
I
instead.
highly doubt
But
that they'll
Powell
change
didn't
like
say that, Joel, and that's the major issue. And that's
Yeah,
me and Mitch have been saying. I mean, this is the major issue. Is Powell in that last speech at Jackson Hole?
I mean, I haven't heard a
I'll
single
give him a
mention
call.
of that
I'll give him a
2%
call.
change outlook,
Said nothing that we're going to adjust up to 3 or 4%. The market
or
would
even
rip higher.
the mention that we'll think about it. There hasn't even been that. Like if they mentioned, oh, we'll think about changing the 2% outlook, but they haven't even thought about thinking about it. Like it's just 2% is set. That doesn't seem to change. And another thing, if they start changing it to 4% or 6%, the narrative that they've been giving us will just seem like a lie.
They're not backing down.
I don't think
no
they're
Fed
going to be
put anymore. The Fed
one
put
thing,
is gone.
They play extreme. They're going to play extreme until this market is in recession and the economy is just deteriorating. Then they'll flip.
But the economy's not doing that. That's the thing.
That's the hard thing.
So they won't
yeah.
stop until
So they won't
it does.
stop. Exactly, because this gives them more money. This gives them more ammo when they want to cut.
You're right. It's more ammo. It's not hurting them that the economy's not
doesn't
flushing
hurt
right away.
them.
That gives them more ammo.
They're not worried about it.
They're putting bullets in the chamber like crazy right now, and the fact that we can eventually lower these rates. So
that talk about lowering rates in 23. I mean, I don't know where that.
That's what they want.
There's still analysts saying that.
Well, that might happen. That could happen is if we just fall off a cliff here and they got to back down. I mean, the worst case for this market would be stagflation, and that's not off the table here either. So again, there's just so many things to worry about. You want to pay 25, taking back to Apple. Do you want to pay 25 times earnings in this environment? Are you nuts? That's what I say. That's why I was like, you know what? I got to hedge this. I got to hedge it. I got to do something.
We'll see what they come out with today. The historical pattern about running up into an event, so there might be like a little bit of a soft bid in there today, but the market circumstances are definitely working, the macro, everything, so it hasn't had that. The only thing I'm going to say is that the market, the S&Ps, the overall market, NASDAQ, they've all given back a lot more than 50%. A lot more. I mean, now we are a good 80 handles through it. But Apple hasn't, right? So to
Not
me,
far though. Where is the 50% on Apple?
152.5.
We're right there.
Right.
I like that. I like that number from just trading perspective. But if this traded at and people don't know that Apple historically traded at 12 or 15 times earnings
for the longest time.
For the longest time. If it went back there to those earnings, the stock's under $100. It's not out of the realm of possibility.
Man, I had Gene on a couple of weeks ago, and I'm looking at the article. Cycle. What?
He's all about the next product, the next big thing. Like he thinks
the
big
next
thing's
driver.
coming. And he might be right too. You don't bet against the geniuses of Apple. I just don't pay 25 times to get along with them. I pay 17. I'd pay 18. I'd probably lift my hedge if we came back down to like 16, 17 times. Talk about, get back down to like 110, 120 on Apple. Maybe I lift the hedge.
If Apple
why
goes
not?
Down,
Joel, go out to the longer term chart on Apple. To think that this cannot trade back down to 110. This thing in 2020 was 50. Before COVID started, it was 80. You've been given a gift of multiple expansion. They did not grow the earnings that much. They grew the earnings a bit, but not as much as the stock looks because the multiple just expanded. Most of this move is multiple expansion. Multiples are contracting right now. Why does Apple get a pass?
Because it's Apple.
It's a good question. That's a good question.
Yeah, but you used to say why, but 3 years ago, we'd say, why is Apple not going to market multiple? Why does Apple trade 13 times the marketplace 19 times? So that worked out and 2 years later. But now I'm the opposite. I'm like, why does it not get a market multiple at least? Why does it not come down to 19 times? Question.
We'll
All right,
definitely
I'm
take a
gonna.
look at it.
I know I had Gene on a little bit ago. Dennis. We're gonna have to find a time because it's really rough for him between 8 and 9. But let's find a time for you to come on Pre-Market Prep Plus.
Sure.
We'll get Gene on again,
There you
and
go.
and you can rattle his cage on that.
Well, Joe, I've been thinking about an event, so maybe I'll talk to you about it. It's an outlook into 2023, and maybe we'll get a couple of guys do a little pre-market prep plus event. We'll talk about it. All right, let's go to Coupa Software. Let's take a look here. Adjusted
Dennis is buying it.
EPS.
I just want you to know, Dennis, where are you buying Coupa software today? Go ahead, Mitch.
That
I'm
works
sorry.
so well on Palo Alto networks. Oh yeah, buy this stock. It's going the gap and goes or gaps and no.
Yeah,
I'm
it's a
sorry,
hard one
Mitch.
there.
Go ahead.
Let's go.
It took 2 weeks, but Palo Alto Network eventually did fill
It
that
came. EPS at 20 cents, beating the 9-cent estimate. Sales at 211 million, beating the 204.2 million estimate. Coupa sees Q3 adjusted EPS at 8 cents to 10 cents versus the 6 cents estimate. So raising their Q3 adjusted EPS and also their sales low end of 211 million to 214 million versus 214.06 million estimates. So the sales is kind of more in line. EPS is definitely a raise there. What do you guys think? Coupa.
All right, you got
Coupa.
over 64. So the first thing I'll do here is I'll look at the after hours high. Does that get 64.20? What am I seeing on the dailies? I see a high at 63.96. So I'm gonna make 64 4-star. I'll give you room up to there. Dennis is buying it at 61.70. I'm just joking, folks. Okay. Dennis, you got room up to 64. If in fact you take out 64, then Katie bar the door on the upside. You're leaking now, and it is not my expertise to pick a bottom in stocks after they've been up $8 and they started going to retreat. So I'll let you guys comment on that. Yeah.
Chase nothing in 2022. There's always going to be an exception. There's always going to be a stock you wish you did chase. But overall, chasing stocks in 2022 has been the recipe to lose money.
Yeah.
We sound like a broken record on this show, and you want to know why? Because we've been right.
Well, the truth is that if you're buying pops right now in this market, it's probably just not the way to kind of trade.
It hasn't worked all year, and we've been talking about that all year.
It's just
Sell
the
the
truth.
rip. Sell the
How about
rip.
your Disney?
Sell the rip.
You should have sold all your Disney, Dennis. You should have gotten
sold it all.
Yeah,
I sold 3/4 of the position. I should have sold the whole dang thing. Obviously, it's coming right back down here again. It's back to where I bought it. So,
you buy it?
No, I'm gonna wait. Everything feels different this
Maybe
time
under 100. Joel, we'll talk about that one.
It depends. You got to get like the overall feel too. I mean, you're sold off hard, and then you come up, and you're selling off hard again.
Yeah.
Are we gonna bounce back? Yeah, we'll have some bounce backs. There's gonna be some opportunities. There's gonna be some great trading, but it's tough, man. I feel like the writing is on the wall here. I don't know if we're testing the lows.
What's up?
And the lows are still a ways away.
What's with the growth trade, Dennis? It can't hold on. Will it be able to hold on?
Too expensive. But Disney's multiple is reasonable. So I don't mind Disney here if you got a 5-year time horizon. That's why I kept a little piece. I wish I would have sold it all and then been rebuying. I think you got a date with $100 here again though eventually. So I don't think you need to hurry. I think maybe at 100. I don't know if you get into the 90. But I think you get down near that 100 again. I think there could be another 10 points of downside here. So I'm not jumping back in right now.
All right, let's keep going. Let's get towards the next stock here on the earnings, which was NIO Q2 EPS at a loss of 20 cents, missing the loss of 17 cents. Estimated sales at 1.53 billion, beating the 1.43 billion estimate. They lowered guidance. They see Q3 revenue at 1.91 billion to 2.03 billion versus the 2.32 billion estimate. Sorry about the writing there. I see an error in my headline there. But Q2 vehicle deliveries increased 14.4% year over year to 25,059 units. They see Q3 vehicle deliveries of 31,000 to 33,000 vehicles. So they expect a lot of deliveries in Q3. But Q2,
What's a lot of deliveries?
31,000 to 33,000 vehicles. I mean,
It
at
doesn't
least
even
it's not
matter.
your
They
garage.
don't make money.
At least it's not your garage type, you know.
They don't make money.
They lose
Yeah.
money.
I mean, this environment here, they show me the money. Show me the money market. They don't make money.
Show me the money.
$16. You want to support it. You want to bring in your short. You got that June low. Just looking at it here,
exactly.
1584. So that's
Yep.
where you may be bringing a short, but I'm not going long there.
Yep. Ballpark in the $16 area. You did get through it a little bit, 1585. So that's what I'd be looking at for potential support. And boy, I mean, you could, if you get a rally, you get someone that's not really paying attention to what's going on with the company, and they just say gets near 1709 was the bottom of yesterday's range. I could even give that a longer term number for resistance. So 1585, 17. We'll see how it reacts today. NIO.
Yeah, one of the insights that I can give you is just look at XPEV. And I always trade these side by side, NIO, XPEV, LI. There's usually one that likes to lead the move down. XPEV is actually leading the move down right now. So keep that one and watch. When you see that one turn around, maybe you see NIO turn around.
What about
right
Tesla?
Now,
How's Tesla doing?
you see that chart, and it's
has it must been quiet, or is that just me?
Well, there's a reason why,
Well,
right? He
yeah.
has his lawyers telling him to.
And you've got the Twitter case here going on, like
yeah, exactly. That's
started here, and we don't know.
He's
where
trying to
that's
save
gonna
his
go either.
butt with the bots right now, Joel. So
you know what
He's worried
happened?
about that.
He just got his legal bill, and he's like,
"Oh yeah,
oh my god, oh whoa,
yeah,
wait
that
a
legal
second,
bill,
man, I can't, yeah, whoa, well, I gotta have to sell, I'm gonna have to sell some more stock."
No, let's not do that. Tesla would come down. Let's not do that. All right, let's go ahead. We can just mention here, I wanted to mention that Google will be having also an event. Of course, there's the Apple event, but Google will be announcing an event on October 6th. So that's still a ways away, about a month away here to debut new phones and watch. Also, Google CEO made comments that the company is trying to improve efficiency 20%. So this is something just to keep on watch. We could be getting kind of a headline coming soon from Google. Either they're cutting down products or could be cutting down some workforce. Nothing is given yet, but comments saying that he hopes to improve efficiency by 20%. So we'll see what happens there in Google.
Just hasn't performed. I mean,
Yeah.
even on the rally, just Google, just a laggard.
It's hanging on right now.
Split. You know how the market went? Yeah, it's hanging on, but just relative strength. I talked about the relative strength in Apple. It's the exact opposite. Where the market took back 50% and a little bit more, this didn't even sniff it. It needed to get to 127 and change and couldn't get over 120. So
back near the lows.
Yep, horrible relative strength. Spoo's still sinking here now. We got an 8 handle, 38.96.75. We've given back all those early morning gains, and there's some on the downside. 83.50. That's your pre-market low. That's right there with your low from yesterday at 86.75.
Money Mitch, we're flying through the topics.
Let's go.
Here today.
Yeah, flying through the topics. Yeah, I think we could sneak one more in. Let's go to the Pinterest upgrade here.
Yeah. Oh,
to Wolf Research here.
Wolf
Research upgrading Pinterest to outperform and announcing a $28 price target
today.
I don't know
where.
Yeah, I don't know where they got this from, but who knows? Pinterest.
Make it up.
Yeah, it just seems like it, but
sounds cool.
Yeah, it's $28. We'll see if we can get up there.
Triple D, I was amazed how much it was up. Triple D.
Well, there's a couple reasons. One, well, let's just say before we get into the reasons why. Well, it's up today because it's not a lot of ratings, not a lot of upgrades, so it stands out. Then you get a day that's just like 30 upgrades. It's not going to stand out as much. It stands out. It's a stock that's still been holding up well. We know because Elliott's in there. I don't mind this long. I said it last week when the thing was 21. I kind of liked it because Elliott had come back and fell the Elliott gap. And it rallied right back up. So I think this is one I'd actually be interested in just because Elliott is in there. mean, the overall market continues to sell off. Eventually, you know, a sinking tide sinks all ships. I guess rising tide lifts all ships. So I just said it backwards. A sinking tide will sink all ships. I'm not sure if that makes any sense, but I think with Elliott involved here, it makes me kind of interested in this one. Get down there 22, 21. I don't want to chase on a day we're up $1, but I can see, you know, a potential, you know, Elliott, another headline coming in and the stock eventually trading above 24. I like this better than other ones.
23, you snuck over 23 in pre-market trading off that. I'm a little surprised at that, but I'll give you 23.05. I mean, prove you could hold the bid above 23, work our way into the 23 handle. But you're right back there at let's say Tuesday. So hard when you skip these days. Friday side. Keep an eye on 23.05. That was Friday's high.
I'd actually go against this analyst outlook here. Biggest thing for me that stands out on the daily is the shadow below not filling there on that recent pullback. I could see it filling that at first, and then maybe we go for the 24, but we'll see what happens there. I've just been seeing so many shadow fills lately that if I see a shadow on the chart below it, I definitely pay attention to them.
You don't have to be scared of your shadow, Mitch.
It's difficult. It's difficult. It's sometimes big.
It should be in this market.
It's sometimes bigger than I am. So you know, when they're bigger shadows than I am, I got to be a little bit careful here. But yeah, that Pinterest 28, I just don't see it. We'll see what happens. All right, let's get out of Pinterest. Let's go towards our guests. Let's get into it here. We got Rob Mclister, editor of MortgageLogic.news and founder of DFS Hub. Let's bring on Rob.
Gentlemen, how are you?
Good. Well, first I got to give a little background here. Okay.
Yeah, tell us a little bit.
All right. First of all, when Dennis talks about the old bright days, right?
Yeah,
back in what
we got one right here.
Yeah, right there was I'll call him the leader of the clan, man. He was a very, very aggressive trader back in the days. Filter trading, which Dennis still does, was way ahead of his time. And then talking about being ahead of our time, Rob and I, what was that, the early 2000s, decided that you should be able to trade sports like stocks. And so we created, like all these fancy platforms that you have, we created T2T Pro. And it allowed people to trade intraday or intragame. And the only thing that it started to take off, except George Bush came out and said, anybody that's involved in internet wagering on sports is going to jail. And so Rob and I closed the company down.
You shut it down right then.
We did. It was like a 5-minute decision. And then Rob pivoted. He's still involved with that. He pivoted to the mortgage industry. Right? You talk about
those go hand in hand,
right?
You know,
yes,
gambling,
the Canadian mortgage industry. And the other day I asked him about interest rates and where they were going. And I didn't want to hear his response, but I'll let Rob give it. Where are interest rates going? US, Canada, you know, whatever. Where are they going, Rob?
Well, I was hoping you guys would tell me that. That's why I was tuning in this morning. I need something to write about later today. Where are rates going? Rates are going up, you know, until this little inflation problem is sorted itself out. And, you know, I primarily look at the Canadian market because, you know, Canada leads the world in all things interest rates, of course. But no, you know, first quarter rates are probably going up through the first quarter, if you believe the market. And, you know, who else do we have to believe other than the futures market and the OIS markets and whatnot, and what market participants think of rates? Because really no one knows. Like, not even the Fed knows, not even the Bank of Canada know where rates will be truly 6 months from now. They don't know what they have to do because they don't know what's going to happen with inflation. What happens if we get another oil shock, you know? What happens, you know, if so we got a bunch of easy comps coming up. Especially in Canada through the end of this year. So there's a really good chance, I think, that inflation could surprise some people in the next few months, worry some people, maybe kind of freak out markets a little bit. And so, yeah, that's my positive take from the morning.
Give me the analogy that that you gave me in the email for the future course of interest rates.
I can't remember what I wrote 5 minutes ago. Well,
80s,
We're getting older.
80s. You said back to the levels that we saw in the 1980s.
well, not the pure interest rate levels, but we're seeing relative increases in rates that we haven't seen in decades. So and that's important because rates are obviously starting from a much lower level. But when you see rates double today, that's not exactly like rates doubling in the late 70s and 80s, but it's very impactful today because depending on who you ask, sensitivity to interest rates is at least 2 to 3 times more today. So in terms of pound for pound impact, the hikes right now are having a material effect on consumers.
Well, that's what I've been wondering. When does this start to actually show up? Because you've raised interest rates. Obviously, your mortgage payment goes up. It's not like you stop spending immediately. Like I've said, there's kind of like, but my whole thought process is first, you're not buying those toys. Maybe you're not going on that trip. Maybe you're not going out for a fancy dinner. Maybe you're turned around the next step and you're selling some of your toys, and then eventually maybe you're racking up your credit card debt. How long does the whole process take before actually people are really feeling the pinch?
Yeah, monetary policy operates with a lag, anywhere from 12 to 18 months, they say.
There you go.
I honestly think that, that lag has come down. It's become more compressed. I think we're seeing business cycles accelerate a little bit. Rate hike cycles and rate cut cycles have more effect quicker because, people are more leveraged, and the economy is smarter. Like people can price things in quicker. You see what happens to stocks when there's like a little ray of light, right? We go up, 10% in no time. And this is what's happening, I think, even with like consumers, right? Normally, like wages, for example, they take a little time to start building, right? People have to feel the pain of higher inflation, and then they start asking their boss for a raise. And that whole process can take multiple quarters before we see a meaningful increase in wages. And now people are like reading in the papers about everyone's switching jobs, and you can work from home, and there's tight labor markets, and yada yada. So it's just a more informed economy where I think the whole cycles are accelerating.
All right.
Okay.
Well,
Go ahead,
Rob, I
Dom.
want to jump in here with just a question on overall housing condition. A lot of housing recession talk out there, and a lot of people are starting to wonder, is this like 2008, 2009 kind of worrying? What do you think here?
I don't think we have a 2008 issue because we don't have the same credit risk that we had back then, among many other things. So this time around, though, prices have doubled since 2013 on a national basis, and we're seeing rate increases, the pace of rate increases that we haven't seen since the 90s. So that's going to have an impact on people. Obviously, and we're seeing things like interesting trends like rents in many cities just surge because people are scared to buy or they can't qualify for a mortgage, and all that stuff really I don't think has hit the market hard enough yet. You have inflation or unemployment near the lows, and you need to see that start ticking higher before we see some real housing pain. So it's just going to take a little bit longer for us to see like material deterioration in the housing market, I think.
One more stock question, and then we'll move on to the real reason I brought you on. So, what do you think of something like United Mortgage or Rocket companies? Rocket's a little bit more diversified there. If you don't want to buy, sell, or hold, we'll make it easy for you.
Well, I sure wouldn't be buying those stocks until we see the market pricing in a top, a definitive top in rates, right? Because I don't think it's safe to go back in the water when you don't know how much higher rates have to go. Because the higher they go, the more housing pain we have. The more pain mortgage originators have. And so, I think you kind of have to hold off a little bit. We got Powell coming out talking tough, and we're going to see what he does in the next few rate meetings here. I think, there's going to be some material increases to rates. Market's looking at, 4% for a Fed funds rate. And, you got to let that stuff, I think, work its way through the system a little bit and get to a point where the market's pricing in maybe, a top or even better rate cuts a little nearer term.
All right, so this guy, I mean, what a diverse guest we have here. That's not even the main reason I brought him on today. The main reason I brought him on today is Rob's working on another project related to sports wagering, and we talked a little bit yesterday about it. But Rob is working on a site called DFSHub.com, and it's daily fantasy sports. So first, Rob, explain the difference, between like your regular fantasy sports that most people do and daily fantasy sports.
Yeah, so regular fantasy football, and we focus on football because it's 70% of the fantasy, the DFS market, at least in our little world. But the regular fantasy player is looking at picking up players and holding them for the season, maybe making some trades and whatnot. Daily fantasy sports is for, let's call it, folks that want a little more action or maybe attention deficit disorder players, people that need to get immediate gratification. And that's why I love it. I mean, DFS, you make your lineup and every week you get, got a blank slate. You can pick new teams, new players. So we tried to basically level the playing field with DFS Hub, and we trying to do that because the pros, just like stocks, right? Just like commodities, the pros dominate, right? And so to compete with them, you got to have pro level data. You got to have pro level news. So we try to take, the best data and the best news, put it all in one place, accessible in one page, and then educate people about which stats matter and to help them pick more profitable lineups.
Okay. All right. And the way you characterized it was the Bloomberg of NFL football, correct?
That's a good analogy. Thank you.
Yeah. Yep. And also talk about the percentages of people that are playing regular fantasy sports, and where do you think the migration is going towards daily fantasy sports?
Yeah, well over 50 million Americans are playing fantasy sports. And, in the daily fantasy space, it's growing in leaps and bounds because, people just want that more immediate gratification. You get about 15 million Americans playing daily fantasy sports, specifically in the NFL. And so that number's just growing like leaps and bounds every year.
Rob, we had a guest on yesterday. I just want to jump in here because Joel loves interviewing you, so he takes over the whole interview. I want to jump in.
I talk too much? Wow.
I always talk too much. We had a guest on yesterday. He was talking about gambling and saying one thing is vices are recession-proof. What are your thoughts here with obviously starting, gambling business going into a recession?
Yeah, well, hey, listen, you play fantasy football and you take your mind off the fact that inflation's at 8.5%. Maybe you don't play that $25 bet, maybe you only, bet $5, but gives people a diversion. People are very competitive by nature. And it's a hobby. You can try and prove you're smarter than the next guy. So none of that stuff changes when, interest rates go up 200 basis points.
And you're still in beta, you're launching, where are you at on it?
Yeah, still in beta, and we just trying to fine tune it, getting a lot of user feedback and trying to incorporate that. And things are coming along though. We've been doing this for about 3 years.
When are you adding hockey? That's what I want to know. Canada, give Canada some love here. When's hockey coming out?
You got to quantify that market for me, Denny.
We're sticking with the NFL. There's
Yeah,
a little more love for the NFL than there is for the NHL.
I think one of the biggest things that you'll see is that, when you're doing daily fantasy sports, you really want to have the edge in knowing the statistical data behind who you're picking, right? And a lot of, I think, at least in daily fantasy sports, and Rob, you can give comment on this. I think it's a lot of it is not just only selecting the top players, right? You have a certain amount of money, so you're going to have to select one of these picks that could potentially be a breakout that week. And that's why you probably need some statistical data to kind of help you have an edge here in picking that kind of boom for the week.
Yeah, it's kind of like the stock market. Fantasy is becoming, especially daily fantasy, becoming very efficient. A lot of smart people, a lot of systems, a lot of models behind the scenes. It's like, remember when trading used to be fun before the computers came to town?
Yes.
Well, the computers are coming to town in DFS, and you want to compete. I mean, you can do pure quant models, or you can do more qualitative models. And that's kind of what we focus on, the qualitative stuff. We got more news than anyone else when it comes to DFS Hub or DFS news, 4,500 plus news sources. And there's gems in there. You can pan the news for gold every day. Most people, go with their gut. They pick their 9-player lineup based on who they think is going to do well. And people have all kinds of biases, right? Like, I mean, receiver did great the last few weeks, so you think he's going to do great this week. And there's just so many fallacies there. And so we try to help people sort out all that stuff.
All right. So I've been collaborating with Rob on a little this of one of my buddies, and I don't go out on the sports fantasy limb very much, but I was talking with one of my buddies, and I got a hot one for you guys this week. I don't know if you're going to be your quarterback for the whole year, and Rob knows what I'm going to say. I think I go with if I was doing this, if I signed up to the site, I'd be going with Baker Mayfield as my quarterback.
Baker.
Yes. Mayfield.
Baker.
Yeah. And you know why, Mitch?
Why?
He's going against his former team, which is an absolute wreck. The Cleveland Browns. They dumped him. They brought on Deshaun Watson. He's got revenge. He's hopefully fully healthy. So you guys heard it here first, man. Baker Mayfield. I don't know. I'll have to figure out the site just to do this. But Rob,
Joel, I just had I had to scroll down about a half hour on my list to find Baker Mayfield. Where the hell?
Yeah, he's cheap. I'll tell you that much.
$5,300. You are the king of value, brother.
That's value. The value pick there.
I might have to start writing for the site. But anyways, Rob Mclister, I put a promo code in there for you guys to use to try out the site. Get in there. So Diversified Rob, he's the editor of MortgageLogic.news. He appears on Canadian television talking about mortgage interest rates. So we're going to bring Rob on again to talk about interest rates. And then he's the founder of DFSHub.com, a daily fantasy sports. And Rob, I don't know if you're coming up to this area at all, but I got some insight on some Lions tickets. So if you're coming up for a game, I'll be able to get you in. So
if they can pull out the first one, I'll be on the next flight.
Okay. All right.
We'll see what happens there.
Rob
Appreciate
Mclister. Thanks for joining us, Rob.
Thanks for having me, guys.
Thanks. All right, there you guys have it. Definitely, I put up the link also in the chat if you guys want to go ahead and check it on out. You guys can get a one thing is you just log in, trial, check out the platform. Tell me what you guys think. All right, let's keep going here. Let's take a look at some different stocks on out there. How's the overall market doing? Hanging in?
Chop, chop. I don't know what I'm going to do today. We were under. What I want, and I with Mitch, and I try to be balanced on this show, right? Two bears, two bulls, and actually, it's funny that I'm just such a. Dennis knows me from I'm like a perma bull, even though I have my percentage of money in the market. There are other reasons why I don't sell. So, but you guys are so bearish all the time. I just have to take the other side of the trade just to be a contrarian. And I'm not going to talk about the high. I'm not going to talk about the low. I just would like to see us close green on the session. I don't even care if it's only one tick at 39.10.75. If we could just close green, just after these choppy days, then you'll have two closes in the same area. If we don't take out today's low, you have a pair of lows to lean on. So that's what I'm hoping for. Who knows what's going to happen? But back to stocks.
Disaster stock of the day, Newell Brands cutting their Q3 EPS here, cutting EPS from 50 cents on the low end to 54 cents on the high end to now on the low end to 46 cents and 51 cents on the high end. They cut net sales guidance from 2.39 billion to a high of 2.5 billion to now 2.21 and a high of 2.32. So even the high is lower than the low on the guidance. And so there you guys see it. Also cutting full year 22 EPS guidance, cutting sales guidance. So pretty much cutting everything here. Newell Brands.
These are not the stocks you're looking for. Stocks making new lows on the move, new 52-week lows, new multi-year lows. I'm going back on the chart. I get it to 2020. $10. And then we had the big COVID bump where everybody was going to stay at home and just organize their pantry for the next rest of their lives. And that obviously didn't happen. And now we've come off substantially. So NWL, TUP, no, thank you.
How about for our old timers in the chat here? What was the old stop symbol? Dennis, don't say anything. What was the old stock symbol for this going back several years? We should maybe Jay Rice will get this, or I don't know who our other old timers. I think he's the only one we have in here over 50. But
man, he's giving you out like that, Jay. He's just putting you out.
Spinner
like
over
that.
50?
I think so.
Actually, I'm almost 50. That's 50 is the new 30. It's okay. Spinner.
Oh, that's what it is. Dennis.
Come on, give me the old stock symbol, folks.
I'll tell you one thing. I don't know it. I didn't even know the stock today.
Who do I say that they make things too good and you don't have to buy them that very often? No, it's not Tupperware. Come on. What do you guys get your garbage cans? Come on now.
I don't know. Is it the jeans? Is it
Dennis, you know what I'm talking about?
No, you've lost me now. This is
oh
a horrible
my gosh.
tangent.
Okay, we're gonna stay here past 9 o'clock.
Welcome to Joel.
There we
Elconin
go.
School.
E2 Computers. Our bot got it. Rubbermaid.
There
RBD.
it is. Rubbermaid.
Yeah.
Rubbermaid.
Yeah, Rubbermaid. Yeah, you buy those garbage. It was RBD, I believe. There used to be no, now the chat's waking up. So, okay. You went to 10, you went to 30, you're back under 20. Wake me up. Several down days in this one. That spike in the pre-market low, since it's a lower price stock. I'll give you that as a target. If I was short, I'd be having my bid out there at 1570 pre-market low, 1567. And I just wanted to bring up another stock that Dennis brought up in the pre-market show that I have not been keeping an eye on. Have you guys seen Triple M?
Oh yeah.
Yeah, it's the hardest hit down on the hardest side. Shows up on my trash. On my trash can.
Holy mackerel.
Trashiest of trash right now.
Yeah.
They got problems, man. They got lawsuits coming at them for earplugs sold to the U.S. Army.
To the Army, yeah.
Major lawsuits here happening. And this is why they could be liable. I think it said for as much as $100 billion here. So this is why the stock has just been epically collapsing here over the course of the last couple of weeks. I mean, it's tough, you think, okay, yeah, there's value here, but you got to pay out $100 billion. And I don't know where that comes down to the bottom line, but it's not good if you own it. So 116, eventually there will be a bottom here, but I want to see, this case get settled before I start jumping in. 2020 low was 114. That's a logical bounce point. But again, headline risk here is nothing short of incredible when you're talking about lawsuits with, earplugs, faulty default earplugs to the U.S. Army. It sounds like about the worst thing you could be doing. So I think lawsuits are coming at them for a while here, and that's not good for the stock.
Joel, I don't know if you want to give some levels. Go ahead, finish up on.
No, I mean, I'll give a 4-star to that level that Dennis gave the COVID low, and that came in at 14. What was the COVID low here? I'm at Triple M. You guys want lows? The COVID low in Triple M is 14. Yeah, 14. 114.04. So you could use that. Gonna have to sell a lot of tape. But the thing is, the concerning is that they settled one lawsuit for $77 million. So if there's 3,000 lawsuits, then
don't add that math up.
Yeah, don't add it up. Don't add it up if you're long. But anyways, that's taking a look at some of your boring staple stocks that I guess are not so boring as of late.
No.
I'll give you some of the stocks that are the hardest hit on RSI on the S&P 500. So these are going to be weak stocks. So Triple M comes up here because it's it's in the single digits. Very rare stocks get in single digits.
Wow.
So that's 9.37.
Can you show us that? Show us that on the RSI chart. Bring it up.
I got you. I can show you on the chart and also my scanner here that I have.
All right,
so
here's
I have
the scanner. That's fun.
Yeah, I have a scanner here on the right-hand side, and this is all kind of S&P 500.
The week of
companies.
the week.
Only
I like
S&P
this, Joe.
500.
The trash of the trash.
So you could see it's really down there. It's gotten destroyed there. So let's go ahead up and bring up the scanner. I'll run through a couple of these.
These are all the weakest RSI readings you've got.
The weakest RSI readings.
What do you got?
Salesforce.
What's the weakest of the week?
Adobe starts it off. Adobe is as weak as can be. It's down to 2.64. The reading doesn't even go to zero, guys. So it can't go to zero. It's bounded. So this is just as bad as it gets.
So it's got to rebound, right, Mitch?
At least what does it show you is that sooner or later you'll probably get a little bit of a rebound. But at least in the time being, if you're in this area, in this scanner, that would concern me. Adobe and Salesforce show up here. So that concerns me. That shows me that I would not want to be
August.
I would not want to be long
hanging out in the cloud.
Cloud stocks. This does not look good here. And then another cloud stock, our leader, right? Microsoft shows up here.
Oh, it's been ugly, Joel.
Ugly. I talked about this on At the Close. If we break this trend line here that's right around the 250s, watch out. That's as long-term trend as it gets.
Not a cheap stock either. What's the multiple on Microsoft? It's not cheap is the problem.
Yeah. I could take a look at it. I just have to pull up my Pro.
I can grab it too.
Yeah. Let me grab my Pro.
But Microsoft is not cheap. It's been given a pass as much as Apple has. It's been getting a pass here. And I think it's like 24.
I have 25, but it could probably be a little
same
bit
as
Apple.
Than that. 24, 25 times earnings. I got the same argument. Had Microsoft long time in the long-term investment portfolio. It was Josh that got me in there. Benzinga, Jason Razek. So Josh was on the show. Remember it, Josh?
Yeah, I remember.
And he gave a stock pick. It was. We had Jason and Josh on the show, and Josh was on. And Josh, he was in the background, and he's like, "What stock do you like?" Jason asked me. He said, "Microsoft." And I bought Microsoft at $151 that afternoon because Josh Razek recommended it on our show, and it went to $300. So good pick, Josh.
350. It went to
350.
Josh.
He was thinking Xbox. Xbox got you a little bit of profits there.
We don't really talk
and I just
about
sold it. So I sold it out because I'm feeling like the multiple 25, 26 times isn't justified. I didn't even hedge this. I flat out sold it, took the gain. Oh, it's going to be a tough tax bill this year. 200, and I think I sold around 270. So I didn't get to 350. That would have been nice, but I think I got around 270.
How far out did you go on your Apple hedge?
January.
Oh, January.
Yeah, I did the conversion. So I'm completely hedged, like market neutral position on it. So I might lift it, haven't decided, but right now completely market neutral. Did the calls and the puts.
Okay. All right.
So
these anything else we want to sneak in?
Those are the stocks that are beaten down the most. The last thing I'll give is let's do RKLB. Because it wasn't the biggest news, but it was getting a little bit of lift in the pre-market. Rocket Lab signing an agreement with the U.S. Transportation Command to explore using neutron and electron rockets to deliver cargoes around the world. So this is kind of a government deal here, and so it kind of gave them a little bit of a lift on the long term. But I honestly, space is not where I want to be in right now.
Yeah, and little stocks getting lifts on this. I had no idea. Sometimes this stuff can go. It doesn't look like it's going. That headline came out last night. It hasn't really gone anywhere here. So looks like a nothing burger to me. Somebody asked about Shopify. I'm going to steal with Dennis with the steal here.
Go.
So you did take out the 30. Very interesting here
now,
you
took
Joel.
it out.
But you're still hanging out. So you could have the old Gil Morales undercut and rally trick. It's not out of the realm of possibility, but it's also not good at the breach support. I'm throwing it to my technical analyst, Joel Elconin. But what's he doing on Shopify at $30? It's hung out here too long, though.
Yeah,
I feel like it's hung out here too long.
Show me some closes over 30. Now that you've broken it and, you broke it and you rebounded it okay. But now it's like, now the people that, bought it in 30 in June and July and August and then September, they're like, oh, I'm going to scratch this one. I just, if I could scratch this at 30, I'll reevaluate. So that's what you need. And I don't know I don't know who's going to upgrade it. I don't know what the market's going to do. I don't know when their earnings are. But now that it's breached it, I mean, you can always lean on, the low from yesterday. But I'd rather it show a little bit of strength and get some closes over 30. So 901, I got a hop. Triple D, I'll be checking in with you at 2 o'clock today. And everyone go out and get them. Great job today, Mitch.
Awesome. Definitely check out PreMarket Prep Plus so you guys can keep up with Joe Elconin. And one thing that I'm worried about, I'll let you get on out of here, Dennis. But definitely one thing that I'm worried about, guys, is that I feel like there was a lot of people that opened up positions that probably were deep into the green when we had this kind of boom. And then when the market's coming down, they're kind of waiting to see if it's going to come up. I wonder if today is the day that you start seeing these bulls get cracked. Because let's say if you got long shop, right, and you had that bottom entry and you got it after the split and you got around here the $30 and you saw it go back up there towards 40, you were up 40%. Now you're right back towards break even. And if it cracks down towards, let's say 27, 28, can those traders really hold on? Will the bulls kind of hold on? Even if the lows are starting to crack. That's why I'm going to be watching stocks like ARKK, the ETF, to see if growth can bounce today. If we just start cracking hard on these, this is when I think that the bulls can start giving up. And so what have we been looking for is a capitulation low, right? A lot of that comes when the bulls give up and the sellers take control. So there's just something to kind of call on out there. Not saying that's going to happen today, but it's something to keep on watch because I do think that a lot of bulls got into this market and now can get trapped if we start breaking through those lows that you're seeing on the daily charts. So we'll see what happens today. And like always, come on over to live trading so that you guys can stay with some live trading action. There's not enough of you guys coming over to the live trading stream where we're just killing it. I got to be as honest as can be. Zunaid, I, and Ryan definitely destroying it in the markets, doing a little bit of live trading action for you guys. So if you want to come on over, join on up. You don't got to go anywhere. This will redirect you right to it. If not, just click that thumbnail that you guys see pop on up and come on over to live trading. I'll see you guys on over there.